The devastation is almost impossible to comprehend. 150 billion, that's the staggering economic cost of the most destructive wildfires in Los Angeles history. Entire neighborhoods have been reduced to ashes, with lives and livelihoods left in ruins. This is more than a natural disaster. It's an economic nightmare on a scale that defies imagination. California's insurance market is buckling under the weight of these fires. Insurers are facing over $20 billion in claims, forcing many to abandon high-risk areas altogether. For countless families, this means rebuilding their homes and their lives is no longer financially possible. The destruction hasn't spared the real estate market either. Pacific Palisades, once a symbol of wealth and stability, now lies in ruins. Property values in fire-prone areas are plummeting, while the scramble for housing in safer regions is driving prices out of reach. And then there's the cost to public infrastructure. Billions will be needed to repair roads, utilities, and essential services. Local governments are stretched to their limits, forced to choose between rebuilding communities or funding critical services like schools and hospitals. These fires are not just shaping the present, they are rewriting California's economic future. The scars may never fully heal. If you want to understand how this will reshape the economy for decades, make sure to like, share, and subscribe to Economy Explorer. And don't skip any part of this important analysis. How the fires impact California's economy. The financial inferno. Immediate economic losses. The devastation from the Los Angeles wildfires has left a staggering economic toll, with damages surpassing $100 to $50 billion, the costliest disaster in California's history. Homes, businesses, and vital infrastructure have been wiped out, creating an economic void that will take years, if not decades, to address. Beyond the immediate destruction, these fires have destabilized the financial foundations of communities, leaving families and businesses uncertain about their futures. The ripple effects extend beyond the charred landscapes, threatening industries, local governments, and everyday Californians who depend on stability to recover and rebuild. Insurance on the brink, the collapse of a system. The financial strain on California's insurance market is unprecedented. With wildfire-related claims exceeding $20 billion, insurance companies are reevaluating their presence in high-risk areas. Many have already stopped issuing new policies, leaving residents without viable options for protection. The state's FAIR plan, designed to offer coverage when no other option exists, is grossly underfunded, with reserves that fall far short of the rising demand. This lack of adequate coverage creates a compounding crisis for homeowners who cannot rebuild without financial assistance. Businesses are also reeling as commercial properties remain uninsured, threatening long-term economic recovery. Without systemic changes, the state's insurance market risks collapse, jeopardizing financial security for millions. A real estate market in ruins. The wildfires have created a seismic shift in California's real estate market. Entire neighborhoods like Pacific Palisades, once synonymous with wealth and stability, have been reduced to unrecognizable wastelands. Property values in fire-prone areas are plummeting, rendering once prime real estate nearly worthless. Conversely, demand for housing in safer regions has skyrocketed, pushing prices to unsustainable levels. This imbalance is driving middle-class families out of the housing market, exacerbating the state's ongoing affordability crisis. Investors are reconsidering their strategies, weighing the risks of rebuilding in fire-prone areas against the potential returns. The economic divide between those who can afford to adapt and those who cannot is widening, reshaping California's housing landscape and altering its long-term economic trajectory. The cost of wildfires on everyday Californians. Housing market shockwaves. The devastating wildfires have left Californians grappling with an unforgiving reality. The dream of homeownership is slipping further away. In neighborhoods once filled with families, only charred remains remain, and for those who survived, the costs of rebuilding are insurmountable. Housing prices in safer areas have skyrocketed, creating a brutal competition for limited inventory. Families that once felt secure are now being priced out of their own communities, forced to move farther from their jobs, schools, and support systems. This growing housing crisis isn't just affecting individual families, it's reshaping the state's entire real estate market. What will happen to those who can't afford to leave or rebuild? The answer reveals even greater economic challenges ahead. Utility and service disruptions. When wildfires ravage communities, the destruction often extends beyond homes. Essential utilities like power and water systems have been crippled, leaving thousands in darkness and without access to clean water. Burst pipes in drought-stricken areas create surreal scenes of water running through scorched earth, a stark reminder of how infrastructure can crumble under pressure. The economic toll is staggering. Repairs will cost billions, and local governments face impossible choices about which services to restore first. How do you prioritize rebuilding when the needs are endless? This infrastructure crisis is just one piece of the puzzle, as businesses and schools also face closures, compounding the hardship for everyday Californians. Economic displacement. For many, these fires have not only destroyed homes, but also their means of livelihood. Small businesses, the backbone of California's economy, are being forced to close their doors, unable to recover from the financial losses. Jobs have vanished overnight, leaving families without incomes to pay for rent, food, or medical bills. Industries like tourism and entertainment, which are integral to California's identity, are suffering from cancellations, delays, and lost revenue. Consider this. Even if homes and businesses are rebuilt, how long will it take for displaced families to regain stability? The economic displacement caused by these fires is creating a cycle of uncertainty, one that could take years to break. Climate-driven financial risks. Insurance and financial market risks. In recent years, California has seen wildfires grow in size, frequency, and economic impact. For the insurance industry, these escalating disasters are a ticking time bomb. With claims from the latest wildfires exceeding $20 billion, insurance companies are beginning to retreat from fire-prone regions. This exodus has left many Californians without viable coverage options, pushing them toward the state's FAIR plan, which is woefully underfunded to handle such widespread devastation. The result? A financial domino effect where uninsured losses grow and rebuilding slows to a crawl. What happens when insurance companies abandon these communities entirely? It's a scenario that raises chilling questions about California's financial resilience in the face of climate-driven risks. Economic costs of climate change. Wildfires are no longer seasonal events. They've become a year-round threat fueled by prolonged droughts, rising temperatures, and unpredictable weather patterns. This transformation isn't just an environmental crisis, it's an economic one. The costs of fighting these fires, rebuilding infrastructure, and compensating displaced residents are eating away at California's annual GDP. Climate change is reshaping the state's economy, forcing industries like agriculture and energy to adapt or suffer. For example, vineyards in Napa Valley are battling smoke damage that reduces the quality of their wine, a subtle but devastating blow to a billion-dollar industry. These compounding losses show how climate change doesn't just burn through forests, it burns through the state's economy, leaving scars that won't heal anytime soon. Global and local ripple effects. California's economy isn't just important to its residents, it's a pillar of the global market. The wildfires disrupt supply chains, halt production in key industries, and strain international trade networks. Imagine this. A delayed shipment from the Port of Los Angeles caused by fire-related closures could ripple across continents, delaying goods and increasing costs for businesses worldwide. Locally, these fires are forcing businesses to close, leading to job losses and reduced consumer spending. What happens to a community when the businesses that employ its residents can no longer operate? These economic ripples, though less visible than the flames, create a long-lasting financial aftershock that reshapes economies on every level. Wildfires as a turning point for California's economy. The fires sweeping across California are more than just natural disasters. They're an economic reckoning. In the aftermath of this devastation, over $150 billion in damages has brought one of the world's largest economies to its knees. Entire neighborhoods have been reduced to ash and thousands of lives disrupted. Yet, the true cost isn't just the destruction of property. It's the wake-up call for a state grappling with how to prepare for a future where such events are no longer anomalies. California's financial systems, from its insurance markets to its public funding, are facing a level of strain they were never designed to withstand. What happens when these fires become the norm rather than the exception? The insurance market, once a stable pillar of California's economy, is now in disarray. Insurers are withdrawing from fire-prone areas, leaving homeowners stranded with unaffordable premiums or no coverage at all. This insurance void has reshaped the real estate market, with fire-prone properties plummeting in value while safer areas see demand and prices skyrocket. Families are being forced to leave communities they've called home for generations, and investors are reconsidering the viability of putting money into regions so vulnerable to climate-driven risks. These shifts don't just affect individuals, they're transforming the very fabric of California's economy, creating economic divides and forcing hard decisions about where to invest and rebuild. California stands at a crossroads. The state must choose whether to invest in fire-resistant infrastructure, sustainable energy, and economic resilience, or continue patching over problems with short-term solutions. These wildfires are not just reshaping the physical landscape, they're redefining the foundations of California's economic future. Industries, governments, and residents alike must grapple with the reality that adapting to this new normal is not optional. It's a matter of survival. The question now isn't whether California can recover, but whether it can rebuild stronger, smarter, and more prepared for what's to come. The scars left by these fires will last for decades, but so too can the lessons we learn today. California has a chance to emerge from this crisis as a model for resilience and innovation, but only if we act decisively. Thank you for exploring these critical issues with us. Don't forget to like, share, and subscribe to Economy Explorer, and check out one of the suggested videos on the screen for more insights. Together, we can navigate these challenges and uncover the opportunities hidden within them. Thank you for being a part of our channel.